Welcome everyone to the Wall Street Blockchain Alliance's March 2024 policy update. My name is Ron Quaranta, chair of the WSBA, here with my good friends Dina and Adam, who I'll give an opportunity to introduce in a moment. Quick disclaimers for everyone watching: please obviously keep in mind that nothing discussed is accounting, investment, legal, or tax advice, and then obviously the discussion and our opinions are our own, don't necessarily represent the opinions of our firms. And obviously, for those who are attending, thank you for watching us on LinkedIn Live and on X. If you've got questions for Dina or Adam, please put them in the chat. We'll be able to address them throughout the entirety of the broadcast. Dina, Adam, good to see you both. For those who might be new in the audience, say a quick hello and introduce yourselves. Dina, why don't you go ahead?
Sure. My name is Dina Ellis Rochkind. I work at Paul Hastings in the fintech practice, but I spent 15 plus years on Capitol Hill working on House Financial Services, Senate banking, but also I did work a stint at the Treasury Department and was involved with legislation going back to Graham Leach-Bliley, e-sign, Check 21, deposit insurance reform, a whole bunch, but more recently the Jumpstart Our Business Startups Act, which made it easier for companies to raise capital in the public markets, but just as importantly in the private markets. And I've also been an in-house lobbyist for Chrysler, where I was there during the rescue or the bailout, depending on what part of the country you're from, and also in-house at a very large mortgage company as their first federal lobbyist in Washington.
Dina, good to see you, my friend. Adam, say hello to the audience, please.
Hi, my name is Adam Goldberg. I am a regulatory subject matter expert for the Enterprise Solutions Group at S&P Market Intelligence. Prior to joining S&P, like Dina, I had some experience working on Capitol Hill for two of the drafters of the Dodd-Frank legislation. I worked for Representative Barney Frank and for Senator Levin, and then came back to work for Senator Levin on the Permanent Subcommittee on Investigations. While I was there, we did some notable investigations such as the J.P. Morgan London Whale investigation, as well as a variety of other things related to the passage of the Dodd-Frank Act and Title VII. Since leaving Capitol Hill, I've done a variety of functions within the financial industry, including working in compliance at Barclays, being a risk and regulatory consultant at PwC, and being the in-house regulatory subject matter expert for MUFG for the Americas, focused primarily on regulatory audits such as the Global Volcker Program, Title VII, uncleared margin, things like that. And then immediately prior to joining S&P, I was at Aaron Fox for a few years doing different corporate and regulatory work. And now my primary focus is focusing on emerging regulations that could potentially affect the financial industry. And for that reason, we spend a lot of time with catching up with Ron and Dina around different developments in the crypto and digital asset space.
I want to say one thing real quickly. So Adam, thank goodness that I was at Chrysler and at Quicken Loans, both of them headquartered in Detroit. For me, Carl Levin was super helpful. So I was lucky at those moments in my career.
There's this weird sense every time I talk to you both that all roads somehow lead to the both of you whenever we have these kind of big conversations around legislation and regulation. Shout out to Gilbert Robert. Thank you for joining us, and thank you for joining us in the audience. And for our friends in the audience, one last thing. Any wager I ever make with Adam about when X will happen, ETS being launched, breaking new records, I lose every time. So you're sort of my guru now, Adam. I want to start with a couple of different things. While everyone's been watching the price of Bitcoin hit all-time highs and then fall back pretty dramatically, and we're watching the entirety of the crypto ecosystem really hitting new highs. We've seen, I think it's BlackRock as a $10 billion spot Bitcoin ETF exchange-traded fund now. Dina, let's start with you. In the context of all of this, certainly a lot of things are happening. The folks, our dear friends at the House and Senate on Capitol Hill are back in session. They've got a lot on their plates, particularly because we're in an election year, which means it's silly time. But what have you seen? What's the state of legislation now? What are you seeing moving through the pipeline?
Yeah, well, first of all, I'm saying we're in the midst of, what was just Super Tuesday yesterday. So we're in the midst of these elections. A lot of people aren't happy with either candidate, but I won't get into that. And so once you get into the election year, it gets much harder to get things done. Things become very political. And I know that the blockchain and crypto industry thinks it's, solely under attack, but it will not be the sole industry to be attacked. I promise you, for those who are crypto fans, you are not alone. But on the Hill, what I'm seeing is, on the market structure bill, there are two main bills. On the market structure bill, Chairman McHenry of the House Financial Services Committee is working to get time on the floor to get that bill passed. I don't think it's going to be a problem getting it passed there. What happens is in the Senate is a much different game because the Democrats control the Senate, and so it's hard to predict. But it's a hard uphill battle there. But when it comes to the stablecoin piece of legislation, that one, Maxine Waters, who's the lead Democrat on the House Financial Services Committee, and Chairman McHenry have been working together on that, but they're not in agreement yet. And what I would say is that one has so many consequences in terms of the dollar as the reserve currency, and the Fed and the Treasury, they don't like cash equivalents, but also if you think about the future and monetizing the internet and Web3, stable coins or fractionalization or tokenization will play a major role in, if you believe in a next version of the internet. So it doesn't surprise me that it's taking some time for something like that to move along.
Dina, thanks so much. Adam, weigh in here as well. And one of the other things I want to throw out there, Dina, that I didn't mention, you mentioned the stablecoin bill. You've mentioned some of the other legislation that's kind of floating around in a obviously fractured Congress. But Adam, we're also seeing, and I'm forgetting the representative, but these kind of prohibiting CBDC kind of draft legislation and proposals. Weigh in on the importance of kind of those drafts, and what are you seeing from the legislative calendar?
Well, the big thing to know, and it builds on what Dina said, is you really need to set kind of the context to where we are. We had Super Tuesday yesterday. We're in an election year. So one thing really to note is the different dynamics in the House and the Senate. So the most major proponent of crypto legislation in the House is currently Patrick McHenry, who's the chair of the House Financial Services Committee. And he has the most ability to move legislation out of committee, potentially get it to the floor, and maybe even get it passed by the whole House. One major problem crypto proponents are running into, and likely will run into through the end of the year, is in the Senate. Because in the Senate, these bills go to the Banking Committee, and the Banking Committee is chaired by Sherrod Brown of Ohio, who's a Democrat. And Sherrod Brown is up for re-election. So that makes...
Well, I can jump in. By the way, Sherrod Brown, who I've worked with, I had two companies also heavily in Ohio, but he does work on a bipartisan basis on some issues. But everyone that has a company out there, if you're in Ohio, man, you're in a good spot because that will be, he always winds up winning, but it will be probably a tight election. But go ahead.
Yeah, that's one of the biggest targets for Republicans on the board. So they're really focused on John Tester's seat in Montana, his seat in Ohio, and obviously Joe Manchin is retiring in West Virginia, which is widely expected to flip to the Republicans. The major problem here is early in the year and even last year, we were hoping that maybe there would be a potential trade where Sherrod Brown is a major proponent of pro-marijuana legislation, especially related to banking, allowing legalized marijuana to get into the banking system. They were still dealing with the memo from DOJ, and there's still a lot of concerns around legal marijuana businesses in states where it's legal having access to the financial system. There was thoughts that potentially Brown may trade that for pushing a bipartisan crypto bill that emerges out of the House, whatever that be it a stablecoin bill, be it the market structure reform. I would consider the chances of that at this point quite unlikely, just in an election year.
Well, there's a big reason for that as well, and that is that most members' positions reflect their states, and so the lead Republican on the Senate Banking Committee is Senator Tim Scott, who you've heard a lot about probably in the national news. And South Carolina has not legalized. I don't know if they've realized, they have not recognized definitely recreational marijuana. So usually most members are reflective of where their states have decided on when it comes to the legalization of marijuana. And so that makes it tough.
Go ahead, Adam.
And for that reason, I would just be sanguine on the chance of any bipartisan deal making happening. I mean, we're seeing the extent of the bipartisan deal making with the current. Really, the only bills that are moving right now are kind of the bare bones basics of governing, which is just funding the government.
Right.
So right now, they're going to vote this week on 6 appropriations bills that have been cobbled together into what's called a minibus. And they're going to bring that up on suspension, which is a special arcane term for basically saying you can get a bill to the floor in the House without going through the Rules Committee. But in doing so, the bill cannot be amended. And also, you need 2/3 majority in the House to pass the bill. The reason the Republicans are employing this strategy on these spending bills is they do not believe that they could cobble together a majority. They have, I think, currently after Swazi was elected and before McCarthy's replacement is seated, they have about a 2-seat majority. They do not currently have a functioning majority to pass their own spending bills, let alone pass whatever compromise would come from the Senate. And that is the reason that they are using this process to get the spending bills across.
So, I mean, I want, can we go back to
Well,
central bank digital currency?
Let's let Adam just
sorry.
wrap that thought up, and then we'll,
Go ahead.
Adam.
Yeah. Just so the only thing I just want to say is we're seeing profound challenges as we've been seeing with the House just functioning in general, let alone wielding a majority that could pass bills that could go to the Senate that could then come to some kind of compromise. Those bipartisan compromises are usually much better done in year 1 of a legislative term, because year 2 of a legislative term always bleeds into election season.
Right.
And the most likely outcome you will see is the passage of these 2 spending bills, and then potentially, and again I say potentially because there's really no guarantee, you might see some kind of foreign aid supplemental pass, which has Ukraine, Israel, and Taiwan funding included in a national security bill.
Yeah.
Maybe paired with some border legislation. There is talks of a discharge position in the House to basically get that bill to the floor around the Republican majority. But those are likely the only legislative vehicles that may move before November.
Maybe flood insurance.
Maybe. So there's some like bare bones flood insurance. We saw
national security related
FAA reauthorization, national security. But the hopes of the industry, the crypto industry, digital asset industry, to get relief on many of these topics through a broader market structure bill, through a stablecoin bill, have dimmed significantly. Again, just with the passage of time and where we are in the election season. The biggest thing that I think we will look for that the crypto industry is interested most in is the Congressional Review Act of SAB 121. So for people that don't know, SAB 121 is a staff accounting bulletin put out by the SEC that makes it incredibly hard for any regulated firms to keep crypto on their balance sheet. And this has been one of the biggest hindrances to major players in the market, let's say the major custody banks participating in digital custody. You also had NASDAQ that said that they were going to be a digital custodian, but then they backed off after SAB 121. Yeah. There is a process called the Congressional Review Act where you can overturn a rule that is passed with a simple majority in both houses. It gets around the filibuster in the Senate. Yeah. The problem is, even if you pass the CRA resolution, it has to be signed by the president. And the understanding is that the president would likely not sign a repeal of a rule that his agency put forward. There's always a chance, but if he were to veto, it would then go back to the houses and they would need to overwrite the veto with a 67 vote margin. Well, with the 2/3 margin, so basically 67 votes in the Senate. They might be able to get 2/3 in the House. It is potential. There is a bipartisan letter. There's a lot of support for repealing SAB 121, but again, getting that 67 votes in the Senate would be very difficult.
So I think, here's my view. I think SAB 121, I think that actually passes and does not get overturned because we've seen other officials within this administration saying that it was problematic. And so I think that's one where I actually think it's going to go and pass. I was going to go back to, so in terms of the dysfunctionality on the Hill, I have to be honest with you. I came in during the 104th Congress when Newt Gingrich was the speaker. It shows how old I am. Congress is always, you think you've seen everything, and then there's always something new. But obviously we, looking at our presidential candidates, we have this, polarization that's going on right now that's reflective of the kind of candidates that we have. And we have big issues with spending that are creating problems that have been bipartisan for a long time. We've got, who knows what's going to happen with commercial real estate. So there's a lot, Janet Yellen's job has gotten very hard. I wouldn't want to be her, right? So I think those kind of uncertainties, I know they're not good for Wall Street, but they typically aren't the best for the environment in Washington either.
Yeah.
I want to go back to central bank digital currencies really quickly. So here's what I mean. I'm not a huge fan, but I think you have to think of it pragmatically. So think about so first of all, there are more dollars moving around. We move more money than any other country in the world by far, right? And if you just think about it, I've never worked at the Fed. I've dealt with the Fed, but not worked there.
Yeah.
But think about how long it took the Federal Reserve to put in place FedNow, right? And I don't, part of it is, again, we're moving much more money than anyone else is. So I think just in terms of timing, the Fed is going to need some time to figure this out. And if anyone has worked with government agencies, especially this is the US, as you know, we have the largest private sector in the world. Agencies and people on Capitol Hill, they generally need advice from the private sector to be able to do this. And the technology is still evolving. So I think central bank digital currencies aren't going to happen immediately. And I think that the US wants the technology and the competition to evolve. But I do agree, I sort of agree with what Chairman Powell has said at the Fed, that if it does come into be, if it happens, it would most likely be on the interbank, on the institutional side, and
not the
unlikely on the retail side.
Right. Dina, thanks so much. Adam, thank you both. We've got a bunch more people who joined. For those of you in the audience, thank you for joining us. I would be remiss, Dina and Adam, if I didn't say it, shameless plug, but we are very proud to have both Paul Hastings and S&P Global as members of the WSBA, and grateful for both of you. One thing I want to throw out there for the audience as well, obviously we talk a lot about DC. Just to be clear, WSBA is not a registered lobbyist, nor do we work with lobbyists. This is very much about the education perspective. Adam, Dina, I want to go back to something that we kind of touched on earlier. I'm going to rip up the script a little bit. There's this common refrain in the crypto markets. Crypto markets have their enemies, right? It's the anti-crypto army. It's Elizabeth Warren, it's Gary Gensler. But there are certain concerns that an Elizabeth Warren raises, and we can have very complicated conversations about the SEC. Dina, Adam, what's that tone and tempo when we were all shocked when we saw the news reporting of terrible attacks in the Middle East were financed by crypto, and that turned out to be substantially not true. What is the status of that anti-crypto army, and what are those valid concerns that a Sherrod Brown or an Elizabeth Warren might have that the crypto industry needs to address? We're going totally off script. Go ahead, Adam.
No, I can take that up. So there was
we'll have different views on it probably, but go ahead.
No, there was a lot of news about potential financing of Hamas. There was a large story in the Wall Street Journal about cryptocurrencies and different digital exchanges across the Middle East being used to launder money, built on the Hawala network in the Middle East, potentially financing Hamas. It actually was confirmed that a lot of that reporting was said traced to U.S. and Israeli intelligence. What it was really doing is it overestimated the amount actually going to Hamas substantially. They basically counted the total transaction number being transferred rather than the money actually that ended up in accounts associated with Hamas, which was significantly smaller. You had this Assistant Treasury Secretary testifying to Tom Emmer in front of a committee where Tom Emmer, who's the GOP whip, was on the committee, and he did ask questions related to this article to specifically state whether or not Treasury stood behind this article, basically the numbers, facts, figures. And he said no. He said substantially these figures were inflated. Treasury is not of the view that cryptocurrency and digital assets are a major funder of Hamas. It is one area that they have used in the past, but it's not one of their preferred uses. And one of the reasons is because these are much easier to trace because they're on a public blockchain. Even if you go through mixers and use a variety of different exchanges, you can map it all the way back to the accounts we think are associated with Hamas. And for that reason, for the tracking, it's much harder to use. So that was a major point Elizabeth Warren was using to justify and get sponsors for her anti-money laundering act related to crypto.
Yeah.
I would say we have not seen that act gain as much legs as many people have thought. People thought if there was going to be the bill that moved, it might have moved related to national security and this anti-money laundering act, which was impose additional requirements on crypto and digital transactions, crypto custodians, crypto exchanges operating in the U.S. It obviously would be a tremendous compliance burden if it were to pass. I would say chances of it passing have dimmed, at least in my mind. I would love to hear Dina's thoughts, but
this kind of goes back all the way to my comments back in 2017 about crypto. So I happened to be working in the Treasury building under the Bush administration during 9/11. And I thought a lot of the proposals that were included in the Patriot Act were onerous and unrelated. And I tried to push back on some of those. I will never do that again when it comes to national security issues. And ever since 9/11, what we call traditional finance, regardless of whether they don't like it, especially the small banks don't. But, we had a lot of these companies were from New York. Their CEOs came into Treasury. They recognized that they had to work with the government, and sometimes they don't like things, but they quietly, they work with the regulators behind, or the members of Congress and the regulators behind the scenes to work it out. Yeah. Now, when it comes to Elizabeth Warren and her legislation, I mean, her version of her legislation won't move. There is bipartisan support for something to be done on the national security side of things, especially when it comes to DeFi, right? But you don't really need the legislation. It's more about whether the industry will, and some of it will grow up and I'm a free market person, believe me, will recognize that the national security issues, which have to do with not just Hamas or whatever, and that's a big issue for me, but also with the dollar as the reserve currency, sanctions, and also if we're going to monetize the web, yes, it is very traceable, right? I agree, it is traceable, not some of it, not the mixers and things like that. But the U.S. government, it's a dangerous world right now geopolitically. So the U.S. government is going to want to, they are going to want to have, they always want everything. They want all data so they can sift through it. And it's going to be no different with crypto. So I do think that in terms of the must-pass bills, that if something else happens or something strange is reported, it is possible that something on AML would get into something else. I don't think it would be as extreme as Elizabeth Warren's provisions. I think it would be bipartisan and something much more reasonable.
Dina, Adam, thanks so much. One thing for the audience, and we've mentioned things that are a little bit complicated if you're not in the crypto space. We talked about mixers, but I would put out there are several firms, and they certainly are being used by agencies of the federal government that help with what we call the forensics of crypto and the forensics of transactions through things like mixers. And shout out to, I'm thinking Elliptic, I'm thinking Blockchain Intelligence Group, I'm thinking Chainalysis. So there are, and these are tools being used by regulators. And I just thought it was important to mention that. Dina, Adam, I want to pivot a little bit. We're talking very broadly about the House and the Senate. And one of the conversations, Dina, that you and I had that was, I don't think, enough of a focus of the crypto space, and I love both of your perspectives. You mentioned the Fed a bit earlier. And the three of us go back in financial markets quite a ways. I certainly have seen some of the things that the Fed's done over time. When I think about things like the Financial Stability Oversight Council, when I think about the power of the Federal Reserve and its impact on different industries and different markets, particularly banking. Adam, let's start with you. Is the Fed one of those, is the Fed the biggest roadblock to wider adoption in the US? And is the crypto industry not focused on understanding what the Fed does enough?
I would say most would probably tell you that the SEC is the biggest blocker. I mean, obviously, the Fed is going to have a massive role in if we do have a central bank digital currency, as Dina said.
Yep.
Another huge problem for the crypto industry, at least outside of wider adoption, let's say of the ETPs, ETFs, is guidance that was issued by the Office of Comptroller of Currency, which does sit on the Financial Stability Oversight Council, which is chaired by Chair Yellen, and it has representatives of the Fed, including Jerome Powell, on it. But one thing the OCC did for its regulated institutions, and the OCC is basically the regulator for our large banking institutions in the United States. The Fed regulates mostly all banks, but typically focuses more on smaller banks, mid-sized banks, or ones that have a systemic designation, which we haven't had in a few years. For the main large banks, the money center banks, we mostly talk about the big Wall Street banks. Many of them are members of the Wall Street Blockchain Alliance. They are regulated by the OCC. And one thing the OCC did release last year was a bulletin which basically said, and a rule, it was guidance, but it said, if you want to do basically anything in crypto and digital assets, you need pre-clearance. Not you need to do it, and then basically we'll give you a heads up or heads not. You basically need to outline your plans to the OCC, tell them what you want to do, and then there's no guarantee the OCC will approve it.
Right.
The OCC has complete discretion as to whether or not. So I would think that there are hurdles at a variety of agencies.
Yep.
The Fed may be a hindrance, but I think, as Dina said, the central bank digital currency, which is really where the Fed would play its largest role, is likely many years off. And one thing that has changed a little bit in these discussions is last year and the year before, there was a lot of talk about the dominance of the dollar. There was different countries started using other currencies except dollars in the wake of the Ukraine war to buy oil, for example.
Yeah.
I would say those concerns about the primacy of the dollar and it being the world reserve currency have severely faded with the Chinese economy essentially imploding.
Yeah.
The other currency that may take the place of the dollar would be the yuan, which may have a digital yuan as they're pursuing in China in their closed market. But
Yeah.
China has a closed capital account and their economy is facing many struggles right now. Europe was in a recession, may be in a recession, so obviously the euro is probably not going to replace. We've
Yeah.
seen over the 80s and 90s, the Japanese yen is not going to replace the dollar.
Yeah.
So I think some of those concerns have faded.
Adam, thanks so much. Dina, you and I had the opportunity and privilege. We had a cup of coffee or a cup of tea, I think it was, in New York when the Gulfstream landed, and you met me in Midtown Manhattan. Pick up on what Adam's talking about, and you and I had this conversation about the Fed, and I remember very distinctly we've had many conversations about being concerned about SIFI designations. Talk a little bit about that, and maybe explain to the audience who may or may not know what SIFI means, and how might crypto in the world that leverages blockchain be impacted by that?
Sure. And so, just so the folks know, I spent most of my career on the banking regulatory side of things and retail finance for most of my career. And as many of you, I was around during Gramm-Leach-Bliley. I will say I had nothing to do with Dodd-Frank. I'm okay with that, except for helping to blunt some of the provisions of Dodd-Frank. But my least favorite part of it is the Financial Stability Oversight Council component to it. So
what is FSOC for the audience? I'm sorry.
The Financial Stability Oversight Council.
Mm-hmm.
So a lot of this, going back to Gramm-Leach-Bliley really quickly, a lot of the players, like Gary Gensler was the Undersecretary of Domestic Finance at Treasury. Michael Barr was the Consumer Deputy Assistant Secretary at, it was a lot of the same people. So we know each other. I know sort of their thoughts and their expertise and their views, right? So Gensler, I admire him. He's a smart guy. I don't agree with him. I admire him. I've known him for a long time in terms of his knowledge of financial markets and those types of things. With Gensler, he is kind of very blunt. What you see is what you get, but he wants to have a legacy at the SEC. And so he is very loud, and you can tell where he stands, right? That is, and again, look at what he did at CFTC for derivatives, right? He was the chair of the CFTC.
Yep.
And now he's known for that whole Title VII of Dodd-Frank for derivatives. But the SEC, you cannot look at it. The Financial Stability Oversight Council is actually it's the core of Dodd-Frank. It's headed up by the Treasury Secretary, and the Treasury Secretary has to vote yes. And you need a majority of votes in the Financial Stability Oversight Council to designate something as systemically important. Now, the largest banks are all considered SIFIs. They're also mostly bank holding companies, and most of them are regulated by the Fed and sometimes the OCC as well, because they're bank holding companies. Yep. They're already in what I call Fed hell, because Fed regulation is the toughest regulation out there. I know from being on the Hill and everyone coming in to see me, what people complained about the most in my jobs, and that was the Fed typically. No, it doesn't matter who heads up the Fed, right? So if you're designated as so there are banks by their asset size that are automatically considered systemically important on Dodd-Frank.
And we're talking the JP Morgan level banks, right?
Right. So I'm talking about that. That's where I'm going.
Yeah.
However, there's also a component of this where non-banks can be labeled as systemically important. And that could mean something like stable coins, which the Treasury and the Fed dislike, especially. It doesn't help them with the Treasury markets, right? If things are going outside of if you have cash equivalents. Mm-hmm. And what I've always said is the SEC is about disclosure. The banking regulators, they can completely shut down your activities. They have a lot more power. if you are designated as systemically important, you are subject to Federal Reserve regulation with heightened supervision, with capital requirements and liquidity requirements that are the same as the largest money center banks like JP Morgan, right?
Right.
And a lot of the business models can't survive, or they have to like break, they have to change their business models. And so I've been always saying, like, be careful for what you wish for. Even if you win in the courts, you might win a battle, but you may lose the war, right? Because you might want to have been fed. And just to be even clearer, the administration, particularly the Treasury and the Fed, are saying almost everything is a financial stability risk that's a non-bank, and so they're going after almost every single non-bank thing you can think of. So the entire private markets, fintech, mortgage servicing. So again, you're not alone, but you're going to see a lot of that shaking around.
Yeah.
And let me say, this gives somebody like a Gensler a lot of leverage, because it's kind of like, do you want to deal with me or do you want to deal with the Fed?
Right.
And most are going to say, I'll deal with, you know what? Maybe I'll just stick with the SEC for now.
Really good point. Dina, Adam, thank you both. And we've been in the business.
Ron, can I just pick up on that point?
Go for it.
One second. Just to note, so there were important developments last year related to the FSOC. So FSOC was originally created out of Dodd-Frank, as Dina said, to kind of bring all of the financial regulators together, because one thing that was shown during the crisis is there was not robust communication between, let's say, the OCC, the Fed, SEC, CFTC. There was not this coordination that we think should happen, and hopefully just the act of having these meetings, discussing systemic risk in the economy would be beneficial. The designation process initially was designed for the major non-bank firms that failed. So, for example, AIG, which was the reason the entire basically global economy almost collapsed, was an insurance company not subject to Fed supervision, had a $100 billion liability that had to be bailed out. They were the poster child. There was also different banks like
there's one bad example in every bucket.
Well,
so you got AIG, the Reserve Fund. There's one of each.
Yeah, GE Capital.
Finish that thought, Adam. Then
Go ahead.
No, but the only point was to say, during the Trump administration, the FSOC, under then Treasury Secretary Mnuchin, he repealed some of the guidance around which firms would be designated, and basically made the criteria so stringent that there would be almost no one that would be a systemically important financial institution that was not one of these large money center banks.
I disagrh.
I feel Dina wanting to argue about this.
I completely disagree with all of it.
My only point is to say that one of the things that the Biden administration did do last year is they updated that criteria. So basically, there is now new guidance and criteria from the Biden administration where if they wanted to designate somebody, they can. And as Dina said, their remit is now relatively broad. They can basically designate almost anything they think is systemically important. They have not done so to date, but that's not to say that they wouldn't in a stress scenario. For example, while we're having this conversation, New York Community Bank is failing as we speak.
Yeah.
So
ironically, all the banks are failing. It's not the non-banks that are failing, but go ahead.
Well,
most of them regulated by the Fed, but go ahead.
3 banks have failed. And one of the funny things is one of the reasons New York Community Bank is failing is because by acquiring the assets of one of the previous banks that failed, they breached the $100 billion asset threshold, which put them in a higher level of Fed supervision, which they weren't ready to comply with, and then had control failures, and now that they're seeking capital and they're failing. But one thing to note is, if let's say this were to spiral out into some much larger crisis, right now it's relatively contained, that could be an impetus, let's say, for an FSOC designation of one of these firms that may be failing. It gives the Fed enhanced powers, not just over supervision, but to potentially bail out the firms if they need to, things like that. So it's just a thing to note. If we have a spiraling crisis.
I mean, there's so much irony. I don't even know where to start. I'm going to say this first, because I handled subprime. I know you think I'm making this up, but I was in house.
No, we know.
No, you don't, but other people will. Listen, I was stuck in like predatory lending and all those consumer issues. Very few of us handled them. They weren't lucrative. There were no CFPB. And what I will tell you is a couple of things about the Fed. Well, I think everyone knows this, that interest rates were held low for a long time, which is we have the same thing now, right? But more importantly, The Federal Reserve had authority. They had primary authority over the Home Ownership Equity Protection Act, HOPA, to tighten up on subprime lending. And they didn't do anything. When they did, it was too little and too late. So there's a lot of irony to all of this. The Fed is, I don't even know where to start. So okay, let's go to the guidance, okay? The guidance, first of all, the companies that were SIFI'd, right, including the insurance companies, many of them were de-SIFI'd. And it wasn't just because of Trump. It was because there was bipartisan support, even by some very progressive Democrats who said, wait a minute, the Fed doesn't know what the hell it's doing when it comes to insurance. And so there was a bipartisan thing so the way that the Trump administration changed it, there were two things. One is we have the alphabet soup of regulators, and they specialize, right? And was to try to defer to functional regulation before moving to FSOC, SIFI designation. Two is that a cost-benefit analysis was done. And they were very focused on activities. And let's say you designated the activity of, for instance, stablecoins as systemically important. You affect the almost entire industry, because once the Fed designates an activity, as anyone who's Fed regulated knows, the whole entire company is regulated. You could have one tiny bank within your remit, and you're still regulated entirely by the Fed. The new rules that came out in January or before that, they basically rolled all that back and say, you know what, we can label anything we want as systemically important. We're not going to defer to, we don't need to defer to the SEC, who may know about capital markets better. We're not going to defer. We can pretty much do anything we want to do. What I would say is, with what we're seeing, here we go. This is being set up with commercial real estate.
Yeah.
So I'll go real quick. Graham Leach Bliley, right? The Fed gets chosen as the lead regulator because of Phil Graham, who I work with. Greenspan, we're friends, right? Everyone avoids the Fed. They get consolidated supervision under the SEC, Fed avoidance. Dodd-Frank, again, the Fed gets a lead under FSOC. Again, everyone's like, how the hell do I get out of this? I can't operate my business. It's not dynamic, right? Again, everyone gets out of it. So we're entering into a moment in time like that. And ironically, the things that have failed have been right under the nose of the Federal Reserve. The Silicon Valley, where the hell were they? I mean, so I think it's very ironic.
SVB
Not
was
just
regulated
about
by
crypto.
the
This is about the entire financial services industry.
Let me interject
I'm sorry,
real quickly.
I'm
No. And for those in the audience, thank you all for joining. If you've got questions for Dina or Adam, certainly put them in the chat. Two things there. One is, I noticed, Adam, that when I said Dina landed in the Gulfstream, she didn't disagree with me. The other thing that I think is really important, and for the record, for the audience here, our networking and happy hours with Adam and Dina are a hoot. There's a lot to talk about here. I want to pull us back a little bit, and really great background on some of the things that are really impactful for global markets, U.S. markets.
Can I say one thing really? I'll say it really quickly.
Go for it.
Promise.
Yeah.
So the lead is on all of this has always been the Treasury Department, Janet Yellen, and the White House, because if you think about what comes before consumer protection and those kind of things, national security, FinCEN. What else is at the Treasury? IRS. Oh my God, like they want people to pay. Like, so if you Secret Service is there, right? And then how about the Treasury markets? So if there's any lead, Janet Yellen is brilliant. I'm not saying all these people are fairly smart, but just because she doesn't put her fingerprints and talk all the time doesn't mean that she's not the lead. And I would say Janet Yellen, Lael Brainerd, and Michael Barr, and then Gensler too, because he's powerful. The Treasury and Federal Reserve are much more of a threat to crypto and cryptocurrency than the SEC is at any day.
Dina, Adam, thank you both. Let's pivot a little bit. It's kind of a tangential to this conversation. We've mentioned a lot of the regulators, certainly mentioned SEC, and Chair Gensler is certainly the favorite villain, I would argue. And we've had this conversation at the WSBA many times. Certainly investor protections are important. Certainly transparent markets are important. So we all get that, the three of us, in the conversation. One of the things that's been interesting in the development of crypto, particularly in the past year or so, is the judicial aspect of it. And one of the things we've seen, and for many, many years, we have many attorney friends and colleagues who have told us that, look, from a judicial perspective, the judiciary will give deference to regulator perspectives, right? And then in the past several months, we've seen, SEC not winning every battle in the courts. Is that judicial deference kind of fading away? And is the courts where we'll begin to see even greater progress? Or are we still concerned about some of the cases that are out there? Adam, let's start with you if we could. What's your perspective on existing litigation that's happening vis-a-vis the SEC?
Well, I think there's kind of two ways to look at it. So you have different enforcement actions of clearly bad players in the market. And this is one thing a regulator has huge control over from their enforcement power. They pick their cases. So usually they're going to pick the absolute worst of the worst, the most clearly guilty, to go to federal court. Where they're on not as good ground, and obviously we saw that with some of the cases where they've actually seen defeats, is when they go after some of the larger players in the market who are making significant attempts to comply and then still get caught up in this regulatory morass, some people call it, but harassment, regulation by enforcement, a lot of different things. And the most significant win for the industry was related to the Bitcoin ETPs, ETFs, whatever you want to call them. And one of the reasons Grayscale was able to achieve that victory in the appellate court was because they had a procedural argument around the SEC's discretionary rulemaking power, which basically was that the SEC approved Bitcoin futures ETFs and Ethereum futures ETFs on CME. And the reason they did that is because that they said that there was true price discovery in the futures market.
Yeah.
Grayscale made a very good point to the appellate court. How is this any different from the price discovery in the spot market? Can you show me your analysis as to how you came up with this difference? Because they seem like is supposed to be treated as like under the regs. And if you're going to say there's a difference, you have to give a good, very long, well-reasoned why. And basically what happened was the SEC could not say why. And if they were to say why, there were so many of these applications, and one of the things they were mandated to by the appellate court was to have a fact-specific record for each application they were going to deny. So not only could you come up with a fact-specific record for one ETF, you would have to go into every single filing and prove in a fact-specific record, which, again, a lot of manpower, takes a lot of time, a lot of agency resources, and it ended up being too much. And so for that reason, they found a uniform way to approve all of them, basically one rationale as to why the futures ETPs and ETFs were the same as the spot market ETPs and ETFs. They approved them all at once with a unified rationale. So I think that is likely the best avenue for the industry to go. Those kind of procedural arguments where you protect a particular part of the rulemaking or enforcement process that does not make sense, especially if like is not treated as the same, then you're on really strong ground with the courts. One thing I would note is there is a case likely to bubble up, and this is probably the best one to potentially reach the Supreme Court. There's currently a district court action in one of the most conservative districts in the country that likely will go to one of the most conservative. Yes, we'll go to the Fifth Circuit, which is considered the most conservative appeals court in the country. That could be the vehicle that gets to the Supreme Court. And one of the reasons is the Fifth Circuit very likely will disagree with the reasoning and rationale of some of the more liberal or balanced circuits, such as the Second Circuit, which is seen as a much more liberal court. That kind of circuit split is exactly where the Supreme Court loves to say, okay, our turn. You have one circuit saying one thing about how these are treated under Howey. You have another circuit saying another thing, how these are treated under Howey. We don't want a different standard for the states that are in the Fifth Circuit as the states that are in the Second Circuit. And so that still may be a couple of years away from bubbling up to the Supreme Court level. But there is a chance in the next few years we may actually get a redefinition of the Howey test, specifically related to digital assets. So that obviously could be a big deal.
I'm more excited about the bigger picture.
Hang on with me 1 second, Adam. For the audience who may not know, what's the Fifth Circuit case you're referencing?
Let me. I'll pull it up.
There's a lot of cases. I keep losing track.
No. Did you have the exact one? I just didn't want to.
Dina, go ahead. Weigh in.
No, I mean, I'm looking at this more broadly. Well, first of all, even if you win a case on a specific issue, which is great, it buys you time maybe, and until the next minute, if there's, if Biden wins or not, I don't know what's going to happen, but it buys you time, right? But again, you're going to have to then the FSOC steps in. So even if you win you still have another threat coming at you. But what I'm excited about is, the SEC had these administrative judges that were sort of the judge, jury, and executioner, but also the other agencies like the EPA, all this kind of administration. I'm a former congressional staffer for most big 15, most of my government career. It gets pretty boring up on the Hill when it's like, or it's annoying when you write a law and the agencies completely right away are like undermining the exact thing that you're trying to do. So I think that there's a good chance that we're going to see some pulling back on Chevron deference. And in financial services, I would say when I came up back to the Hill, I worked for Pat Toomey when I came back up to the Hill. What I saw was that the regulators had already had a lot of authority, but they had been given so much authority that I spent a lot of time with my writing letters and trying to get bipartisan support to try to pressure the agencies into doing something different or not doing it. So the bigger picture on Chevron deference, it will affect not just financial services, it can affect other industry players. And I'm as a former Hill staffer, I kind of like it, that Congress should be involved sometimes rather than with elected officials rather than although some people will say, well, we don't have the greatest ones right now, but put that aside, but rather than the regulators just being able to do what they want to do.
Dina, thanks so much.
And I do have the case. So it's the case involving a not yet operational crypto exchange called LEJILEX, and it was filed in the Northern District of Texas. And it's seen as a strategic filing because, again, the Northern District of Texas, I believe, is one of these districts which only has one judge who's incredibly conservative. And you see this forum shopping. A lot of them, we had the Mithapriston case, which went to a specific judge in Texas that the plaintiffs believed would rule in their favor. Then it would go up to the Fifth Circuit. Fifth Circuit, again, incredibly conservative, likely will lead to a circuit split with the Second Circuit, and that would be the vehicle to get to the Supreme Court. So it's LEJILEX, Crypto Freedom Alliance of Texas are the plaintiffs, and they're suing the SEC in the Northern District of Texas. And it was filed on the most recent filing is on February 21st of this year. So obviously there will be a long lead time on that, but it is one vehicle. I will address kind of what Dina said about the administrative law judges at the SEC. So there's two broad challenges to federal enforcement power currently. So there's one case where someone's trying to completely invalidate FINRA oversight, which would basically mean that FINRA could not actually be an enforcement regulator, which would obviously pose huge problems for the SEC. And obviously FINRA or any self-regulatory agency was stripped of their enforcement power. That would obviously have huge impacts on the CFTC because basically all of their enforcement actions are done out of their self-regulatory organization, the NFA, the National Futures Association. Obviously FINRA has a lot too with the SEC, but the SEC has a robust enforcement staff outside FINRA.
Yeah.
What Dina was talking about, the administrative law judges, is basically what the court said is the SEC, in a way to kind of streamline their process, rather than going to federal court for all of these different enforcement actions, what they do is essentially have this internal process within the SEC where they hire an administrative law judge who then hears the case. And then if you lose, you have an absolute right to go to federal court in order to have that adjudicated if you don't agree with the decision. Basically, what the court said is, SEC, you don't have the authority to do that. You don't have
small companies, like a small company, if the SEC comes after a small company and they rule against them, then that small company, unless they have work with like ICANN, which is a former colleague of mine that helps these kind of companies on a pro bono basis, it sets precedent. So the little guy comes in and they get stuck with this thing. They can't afford to go to court, right? And it sets precedent for larger companies in terms of the way that they're treated in enforcement action. So again, this is not solely an SEC thing. This is all, and when you go into court, it's expensive if you're in litigation, and you get due process in court. You don't get due process when you're in one of these types of administrative processes that don't just occur at the SEC.
I feel like Adam may disagree with you about the administrative law judges, but
so one thing you've actually seen is almost anyone who worked at the SEC, even on the Democratic side. My former boss used to be the chief of staff to Commissioner Kara Stein. Even he conceded that the administrative law judges are likely unconstitutional. this process. Like,
But they
even
never
if
go up because it's too expensive to go all the way
yeah,
to
like
the Supreme
even
Court.
if you agree with the goals of what the SEC is trying to do, if you are actually reading the established statutes and the way delegation doctrine works in the federal courts, it is likely unconstitutional. So even if you think there are good policy agreements for them, that's one of the reasons that the argument found favor at the district and the circuit court. One thing to note is, as I was trying to go back to earlier, these kind of procedural arguments are likely where the industry has the best standing. They
Not
are
just
much,
it's any industry just about.
yeah, because bad fact, and this is an old saying amongst lawyers, bad facts make bad law.
Yeah.
The SEC in their enforcement cases usually tries to have good facts. Good facts for them mean like the Terra Luna case or Do Kwon stuff. A fraudster
But you got the
steals.
EPA case too.
Yeah,
You got the EPA case. This is not just it's
yeah.
going to be also the DEI offices. I mean, it's like such a far-reaching kind of
and
concept.
also,
All of it.
one of the worries here is with these cases. So, the relief some of these plaintiffs are seeking is sweeping and broad. So, for example, the ALJ case, the guy wants all SEC enforcement of him thrown out, and he's basically a fraudster. He's just basically saying you don't have the authority here, even though I clearly committed fraud. The process is wrong. I should get off scot-free. Typically, courts are not going to do that. They're going to find some kind of accommodation where they make their point. This process is unconstitutional, but we're going to try and limit the bad outcomes that result from it. But with this Supreme Court, they seem a little less concerned with some of those outcomes. I mean, we've seen that with some of the Dobbs decision. Obviously, IVF was ruled unconstitutional in Alabama. You have some of these unintended consequences that in past have restrained the court.
Yep.
We don't see that as much.
I've got to move us on.
I was going to say, let me respond
Quickly.
to some of these administrative things that you get involved with in different agencies, right? You are actually, if you don't have a choice, maybe if a choice would be better than if you can also be jeopardizing your own case, in terms of before you even go to court.
Yes, absolutely, because of the statements and the arguments you make in the administrative law proceeding can be used in federal court. So
I got to move us on, guys. I got to move us on. It's a complicated, great topic. Two things real quickly. Obviously, it's all our personal opinion. We'll see where facts go.
It's definitely our personal opinion.
These are all our personal opinions. So, let justice be done, whether or not someone's a fraudster. But all good conversation. One other thing I want to add there, quick story. I had tried to describe to a colleague who's not involved in markets, administrative law judges, and a very brief conversation. I'm not a lawyer, as you both know. And at the end of the conversation, her response was stunning to me, which was, I thought judges sit in the judiciary, which was a really interesting perspective on all of this. I want to raise one last thing. We've only got a few minutes left. There's so much more to cover. And thank you for everyone in the audience who joined us. Something really interesting since our last policy update rather. Looking at the states, when we talk about things like, the news that really caught my eye was it's easy to call out these SEC v. Coinbase cases and all of the other judicial stuff going on. But states' attorneys general have recently pushed back against the SEC. Dina, Adam, do you want to talk a little bit about that? And is there importance to that vis-a-vis the crypto world?
Dina, I'll let you take it first if you want.
You want me to take it first? I mean, I look at it more in the big picture aspect of it. I haven't read the whole case. And it's funny, I tend to focus on the legislative and regulatory side. And even though I'm an attorney, like by the time I'm going to be very open when it becomes case law. For me, sometimes it becomes a little bit fictional, right? Because they're interpreting things that, didn't mean anything to me when I was drafting it, or they meant something else. But anyway, so, I mean, I think from a big picture standpoint, when you talk about, and in crypto, a lot of times they're, especially in the money transmitter licenses versus the, having federal regulation and things like that. What we're going to wind up with is likely both. So you're going to have both, assuming legislation passes at some point, you're going to have both the state regulation and the federal regulation. That's the only way to resolve it. I haven't seen preemption since I worked on the FACT Act, which was on credit reporting. It was actually Barney Frank that we worked with. It was bipartisan, but generally speaking, on these issues, you're not gonna. I don't see I just see the outcome being that you have, a very, it'll be very lucrative for lawyers, right? Because you need to buy by the states and with the Fed, and with the
Yeah.
feds. But
Yeah.
again, like I
So
just
you're,
don't
I would
see
sorry,
that.
Adam, real quickly, Adam, just to throw this out there, and please respond to this as well, Adam. But so you're seeing a world in the future where it's very similar to your money transmitter licenses in all states. If you're going to do business in that state, you kind of need an MTL. Is that kind of the vision? And Adam, please tell me if I'm missseeing it as
Oh,
well.
well, I think
That's what I see it
well, it
as.
goes two ways. So clearly, there will be local regulation. States are laboratories of democracy. They each take different approaches. Wyoming, for example, very wide open regulation related to crypto. A lot of businesses moving there. California, New York, Illinois is passing some of the most stringent crypto regulations in the world. But one thing you'll notice is, for example, New York did a big revamp of its blacklist of its regulations related to
Right.
crypto. But in an industry such as this, that is so global, that is on rails, that go all over the world, and customers that are from all over,
Yep.
it's pretty easy for businesses to comply, even if you're based in New York, because you basically just shut off the flow for anyone that's not in New York. So, the way the companies usually react is if they don't want to deal with stringent regulation, they just say, if you're a New York customer, you can't be part of it, or if we'll implement the additional requirements we need, but just for New York customers. So you do see that patchwork of regulation. And one of the big things is that in mostly every one of the bills that are moving the federal legislation, you're going to have a concept called preemption, which is basically the federal government is going to take these regs from the states. They're going to say federal supremacy is going to apply. We're going to have national rules for a national market. We're going to have a national regulator, be it the SEC, CFTC, whoever it is, if it's a joint body, if it's an SRO, will set national standards, national guidelines. For many of these firms, it's still incredibly complicated. If you're a California firm, you're going to have to comply with California law. You're going to have to comply with a state law, federal law if it comes. And then if you operate internationally, you're going to have to comply with MiCA in the EU. You're going to have to comply with a different set of rules and the different Asian regulators. So there is still going to be lots of regulatory arbitrage and lots of different standards and a patchwork. But one of the things that should help the industry come to common standards is if and when we ever do get regulation, there likely will be federal preemption language, which is included in most of the securities regulations, most of the commodities regulations, most of the banking regulations, which allows for things like state money transmitter licenses. But if you meet the criteria of being a federally insured bank under the FDIC or Fed, you have to meet both, basically. You have to comply.
You'll have to be both because the feds will never, the states, they need the revenue. And so you're going to have both, no matter what. The states can't give, they're not going to give
they're
up
not going
that
to give
revenue.
it up. But if federal preemption at least allows for national standards, so you'll have to comply.
But you're going to wind up with both.
Adam, Dina, we've got about 2 minutes left. I've
Yeah.
got one last closing comment, and you both know, just for the audience, the WSBA will be visiting our friends and colleagues in Washington, D.C. a little over a month from now. Dina, Adam, looking forward to working with both of you and kind of spreading the word and voice of industry and the kind of the education perspectives. We mentioned elections a lot, particularly this is an election year, and it does, makes it crazy season, particularly in Washington, D.C. Will crypto matter in the elections?
Yeah, it will.
I think so, but I think also one thing to note is even if Biden wins, I would expect more lenience towards crypto in the second term because everyone does expect Gary to likely leave the SEC. The only caveat there is if Biden does Biden does win and he leaves the SEC, he may become the Treasury Secretary. Really, the two leading candidates right now are Leo Brainerd, who moved over to basically be the chief economic policy at the White House when she left the Fed. She would also be the successor for Jerome Powell if he was ever to leave. So you would think she stays on that track. The leading in-house candidate for Treasury Secretary is potentially Gensler, and that could create issues for the industry. But if, let's say, he's not that, and he were to leave, you are likely to get a more crypto-friendly chairman than Gensler, just because he's been seen as very anti-crypto.
Interesting. Dina, do you agree about Chair Gensler and Treasury?
I mean, I just don't. Well, I was going to say it has an impact because look at Super Tuesday, the biggest one with all the, all the campaign money coming in. The biggest one was Katie Porter, being knocked out of the primary in California. That's a pretty big, and so that's a lot of money. So I was going to say that the political fundraising and things like that, it depends where crypto is compared to traditional finance. Has been doing this for a long time. Regardless, okay, let's assume Biden wins again. I don't know who's going to move it. And the fact is that even those people, they don't talk about it. The reason that somebody like a Gensler is saying, "Oh, I want to stay at the SEC," is if you talk about, "Oh, I want this role or that one," it's in the press, you're not going to get it, right? So we don't have any. There's no like pre-made choice in my experience with these things, but I do think that we're going to get into a better environment because the U.S. is basically doing whatever it has to do for national security and protecting the dollar, right? And so what the Genslers of the world and the administration, they're trying to push a lot of this into, TradFi. Some of it, is unfortunate for maybe some of the other companies, but U.S. companies, a lot of U.S. companies will, I think, make it. But when you move it onto the institutional side, rather than having retail investors buying different cryptocurrencies, there's a lot more money involved there than there is on the retail side. So I think regardless of who wins, I think things will, commercial real estate may mess everything up. They're going to blame crypto for it.
That's a whole other session.
But generally speaking, I think as the government feels like it's getting more control, I think we're going to turn a corner no matter who wins.
Dina, Adam, we are out of time. For everyone in the audience, thank you so much for joining us. Gilbert, Roberts, thank you for the kind words. Thank you for joining us. If you have additional questions for Dina and Adam, please drop us a note, info@wsba.co. We will get those questions to Adam and Dina. We'll be back again next month. There's a lot that's going to be happening, I'm sure. Dina and Adam, as always, we could have gone for another hour. Looking forward to seeing you both next month as well. Thank you for your time. Let's leave it there, and we'll see you next time.
Thanks, everyone.
Thanks.
Thank you.